Hello, welcome to our lesson for today. That's consolidated financial statements, intercompany transactions. Okay, so alam naman natin from our first discussion of consolidated financial statement, why are we consolidating? Kasi there's a parent-subsidiary relationship and the regulations or the authorities require that they present a consolidated financial statements. When they do consolidated financial statements, the assumption is single reporting entity lang sila. Okay? So, anong mangyayari if si parent nagkaroon ng transactions with the subsidiary, knowing na sila ay pag kinonsolidate yung financial statements, maaari mag-reflect yung bentahan between the two. Eh, di ba single reporting entity sila? Hindi pwedeng mangyari yon. Okay, so we are going to discuss how do we uh, reconcile, how do we account for intercompany transactions. Okay, so medyo i-ready nyo lang ang sarili nyo kasi talagang ito ay sumakit nga ulo ko kagabi eh. Sumama ang pakilasa ko kasi dapat kagabi ko to i-record. Okay? Kagabi, prepared na siya kagabi, pero after ko ma-prepare, bigla na lang bumagsak yung katawan ko. Parang sabi ko, bigat-bigat na katawan ko. Parang hindi ko kayang mag-discuss. So, I'm actually recording it morning. Okay, so, okay, anyway. Intercompany transaction. These are transactions between the parent and subsidiary. Effects of the transactions are eliminated when preparing the Conso FS since the parent and the subsidiary is a single reporting entity. Yun yung sinasabi natin kanina. You cannot transact with your own self. Okay? You just have to remember that when doing intercompany transactions, hindi ka pwedeng in consolidating financial statements, your mindset is hindi siya pwedeng mag-transact sa sarili niya. Kasi single reporting entity si parent at si subsidiary. So what are the most common types of intercompany transactions? So we have intercompany, excuse me, excuse me po. Intercompany sale of inventory, intercompany sale of property, plant, and equipment, intercompany dividends, and intercompany bond transactions. So, apat yan. So, prepare. Okay? We have intercompany sale of inventory. So, we have two types of this intercompany sale. First description is a downstream. Ano yung downstream? The parent sales to the subsidiary. So, yung parent, nagbebenta siya doon kay subsidiary. Okay, that's the downstream. Ang upstream is the subsidiary sells to the parent. Okay, so yon. So you have to remember that downstream and upstream. Ang downstream, the parent is the one who recognizes the profit. Yung NCI, hindi siya affected. So you don't have to adjust, okay, the NCI. And the profit, if downstream, is solely for the owners. Okay, it's solely for the owners. Okay, ang upstream sales naman, this is, yung NCI is affected, okay? And the profit is both sa owners of the parent and sa NCI. Okay? So, remember these concepts. So, parang sa downstream is, what is mine alone. Okay? Si upstream naman is, what is mine is ours. Okay? So, ganyan talaga. If si subsidiary nagbebenta kay parent, magkakaroon ng share yung owners of the parent and the NCI. Okay? So we have an example here. So we have Twiceco adapted. Twiceco acquired 80% interest in its Inc. on January 1, 20X1 for 75,000. Okay, information acquisition date. So we have inventory 20,000, equipment 40,000, total of 60,000. This is getting amount, fair values given. And then we have the fair value adjustments kasi it should be recorded at acquisition date fair value. So 4,000, 12,000, total of 16,000 adjustment. Okay? Additional information, the remaining useful life of the equipment is 6 years. It is assumed that the 4,000 FVA was sold during the year. This is the inventory. Okay? Twiceco measures NCI at proportionate shares. Then we have on consolidation date, consolidation date, that's on December 31, X1. You were given the statement of financial position of the parent and then the subsidiary. and then the statement of profit or loss by the parent and the subsidiary. Okay? Then we have the additional information. So we have the following intercompany transactions. Twice cost sold goods costing 12,000 yun ha, to ETC Inc. for cash at a markup of 40% on selling price. ETC held 1/4 of the goods at year end. So may mga markup na naman tayo. May mga on selling price, on cost, ganyan. So you have to recall how to execute such pricing methods or such markup methods. Okay, so twice co-acquired inventory from ETC Inc. for 12,000 cash. ETC Inc. uses a normal markup of 25% above its cost. Twice co-ending inventory included 4,000 from this purchase. So what's the first step in tawag din in overcoming this procedure? In overcoming this procedure talaga. In overcoming this accounting, first you have to analyze the effect of the intercompany transaction. So, yung first one is, ang nagbenta is the parent. So, from there, you know that's a downstream transaction. So, may idea ka na dapat affected lang is the parent. Okay? Then, we have the letter B. It is an upstream transaction. Why? Because bumili si parent kay subsidiary. So, si subsidiary ang nagbenta. Okay? So, from there, you have to think na may share dito si owners of the parent and the NCI. Okay? So, next one, you determine the unrealized gross profits in ending inventory. How do you do that? Di kukumpute tayo ng unsold portion. Okay? The unsold portion is actually the unrealized gross profit. Kaya nga siya unrealized eh. Okay? Ibig sabihin, nandun pa rin siya. Okay? So, we have where do we go? So, we first look at the downstream, okay? So downstream, sabi kasi is, that's 40% markup on selling price. So, if alam mo ang markup is 40%, you know that the gross profit is 40%. Okay? So, markup kasi 'di ba ang gross profit is actually sales less COGS, so that's your gross profit. That's actually part of the markup or the markup itself, so that's 40%. So how do you go from, ang given lang is 12,000, okay, that's the cost. Okay, how do you go from 12,000 to the sales? So, if ang markup is 40%, that's a gross profit, you have to analyze that the cost is actually 60% in order to make buo the 100%. So, if 60% si cost, the 12,000, how do you go from 60 to 100? So, 12%, 12,000 divided by 60%, you'll get 20,000. Okay? So, that's how you get the 20,000. Then, 20 less 12, you'll get 8,000 gross profit. You can check that 8,000 is 40% of the selling price. Okay? Then, afterwards, the gross profit, hindi naman lahat yan ay we have the unsold portion. So, yung 1/4, sabi kasi 1/4, hindi ko kasi malagay yung 1/4. Pag nilalagay yung 1/4, nagiging date. Okay, so yung 1/4, you just multiply it sa 8,000. You'll get the unrealized gross profit on ending inventory. So, nasa ending inventory pa siya, 2,000. That's for the downstream. For the upstream, you compute, sabi kasi is, it is normal markup of 25% above its cost. So, ang cost, 25% above its cost, ibig sabihin yung cost 100%. Si selling price is 125% kasi 25% above its cost eh. So, knowing that assumption, so 125%, you put it in the selling price, then 100% kay cost, and then 25% kay gross profit. Ang given lang naman sa atin is 12,000. Acquired inventory from ETC for 12,000. Ibig sabihin, yun yung selling price niya. Pinagbenta ni ITSI or the subsidiary for 12,000. So, this is the selling price. How much ngayon is the cost? So, 12,000, you divided by 1.25, you'll get 9.6. Okay? Then, 12,000 less 9,600, you'll get gross profit of 2,400. Okay? So, you multiply it then by the unsold portion. So, ilan lang ba yung natira sa ending inventory, that's 4,000. So 4,000 divided by 12,000, okay, you will multiply that fraction na makukuha mo sa 4,000 divided by 12,000, okay, 2,400. You'll get unrealized gross profit in ending inventory of 800. Okay, I know you will find another version of how you do computation of unrealized gross profit. Okay, you just have to tawag din kapain nyo lang yung sarili nyo if saan kayo mas komportable. Okay, if it's the one we have here, or the one you have discovered from ibang, from different books, from different YouTubers na nagdi-discuss din ng same topic. Okay? So, you have to find where you are most comfortable. Okay? Yeah. Next, we now look at the fair value adjustment for 12/31/20X1. Check natin if there is a fair value adjustment kasi parang subsequent measurement na to. Okay, so we have the inventory 4,000. Sabi, the 4,000 FVA is actually consumed kasama siya sa nabenta. Okay, so tanggalin na natin siya. So, ilagay din natin siya sa depreciation. Although, it's not actually the term. So, it's 0. So, wala na siya. That's a fair value of adjustment for it. So, 0 siya. Then, we have equipment. Yeah. Ang kanyang useful life is 6 years. So, 12 divided 6. Okay, you'll get the yearly depreciation of 2,000. So, 12,000 na equipment. Less 2,000 na depreciation, you'll get 10,000 fair value adjustment. Okay, so we have the total of 10,000 fair value adjustment. Okay, now we compute for consolidated ending inventory, consolidated sales, consolidated COGS, and consolidated gross profit. Okay, so actually this is a pro forma formula. Okay, sa module na ginawa natin, okay, meron akong binigay doon na pro forma ganito. Okay? So we have, how do you compute for consolidated ending inventory? You have ending inventory of the parent. Okay? Add mo ending inventory of the subsidiary. Okay? Is given sa financial position. Then you less the unrealized profit in ending inventory, or UPAI. Okay? So the UPAI less the UPAI, add mo lang yung 2,000 from the downstream and the upstream na 800. You have UPAI of 28. Okay, so less mo lang siya. Then, add the fair value adjustment, okay, nung depreciation ng inventory, that's 0. Okay, so wala. So, we have consolidated ending inventory of 104,600. Okay? So, next, we have consolidated sales. Madali ang sales. Kasi, add mo lang yung sales ni parent and subsidiary, then iless mo yung intercompany sales nila. Okay? Saan ka titingin? The 20,000 sales, and then the 12,000, 20,000 downstream and 12,000 upstream. Okay? So, add mo sila, you have 32,000, iless mo. Ngayon, from the consolidated sales before adjustment, okay, you'll get 448,750 consolidated sales. Okay? Next, ito medyo mahaba yung COGS. Okay? So, you add the COGS of the parent and subsidiary. Then, you less the intercompany sales. Okay? So, that's 20,000 plus 800. Okay? Sorry. No, that's not 20,000 plus 800. This is this one, the 32,000. Copy paste. Okay, 32,000. That should be 20,000 plus 12,000. Okay, so 32,000. Then you add the UPAI. Okay, add it, the UPAI. 28, then less realized gross profit in ending inventory. Wala. Okay. If meron, ay di lalagay natin. Okay. Then we have add FVA in inventory. So that's the fair value adjustment na 4,000. You get COGS of 256,400. What are we actually computing for here? Okay, we're computing for the COGS. Okay, so yon. Then, how do you get the consolidated gross profit? ID sales less COGS. You'll get 192,350. Okay, so yon. Now, next, tingnan muna ha. Okay, next we have check in subsidiaries net assets for any changes. Okay, yung realized profit in beginning inventory, that's actually yung previous year na um, parang ngayon mo lang siya nabenta. Okay, if you have encountered something like that. So, the same, how you do it's unrealized, pero siya realized na ngayon. Okay, so we have check subsidiaries net assets for any changes. Okay, so ito naman, you just need to input the FVA. Okay? So, net assets at carrying amount. So, given naman tayo before na 74,000 siya. Okay? Then, we have 150 per computation ng financial position. Okay? Then, pasok mo si FVA at 16,000. Then, FVA noong 12/31, we computed it at 10,000. Then, because this is a subsidiaries net assets, we all know that it is affected by the upstream sales. Okay? So, iless mo ngayon yung unrealized profit from upstream. Okay, so less 800,000 sa 12/31. You'll now get 109,350. So we have net assets at fair value of 90,000. For the for 12/31/20x1, you'll get 109,350. A total net change of 19,350. Okay. So yon. If you haven't computed for goodwill, please compute. Okay, so we have consideration transferred, sabi naman 75. We have NCI, so 80% yung binili, so the NCI is 20%, 90,000 times 20%. We have 18,000. Previously held equity interest, 0, total of 93,000. Now, you less it sa fair value of net identifiable assets acquired, the 90,000. Goodwill, wala tayong goodwill. Okay? Wala tayong accumulated impairment loss, sorry. So, we have goodwill on December 31, 20x1, 3,000. Okay, ma'am, why are we always checking for impairment loss? Sabi nga ng standard, we always have to check for impairment if the goodwill is impaired every year end. Okay? Yun. Then, hindi pa tapos. Hanggang step 5 pa to. So, we have compute for the consolidation date, NCI, and consolidated RE. So, how do you do this? You actually just do the basic procedures. So, for the subsidiary net assets at fair value, you just get it from 109,350. So, saan natin na-compute yan? Sa dito, subsidiaries net assets for any changes. Dito siya na-compute sa step 2. Okay? So, multiply it by the NCI's percentage, which is 20%. You'll get NCI in net assets of 21,870. Okay? Then next, for the consolidated RE, you all know that this is only for the parent. So, parent's RE, kunin mo lang siya from the financial position, that's 120,000. Then, you less, dito mo ileless yung unrealized profit from downstream. Okay? 2,000. And then we have parent share in the net change in subsidiaries net assets. So we all know that the net change from step 2 is 19,350. Okay, net change in fair value. Okay, so 80% ay kay parent. So that's 15,480 majority. Then you have consolidated RE 12/31/20x1 of 133,480. Okay, so yan. I think you're going to have to take time in muscle memory, in doing muscle memory for this consolidation. Kasi talagang, nung undergraduate ako, ito talaga yung pinagtuunan ko ng pansin. Okay? Kasi, hindi siya kaya ng isang araw eh. Kumbaga, you have to practice maybe a week for this. Okay? Para makuha mo yung laylayan. Yung laylayan. Okay? Para you have to familiarize yourself with the certain transactions. Okay? Kung saan ba si downstream, saan si upstream. Ang most common kasi is intercompany sale of inventory. Okay? Yung property, yung dividends, and then yung bond transaction, hindi siya malimit, tinatanong. Pero yung intercompany sale of inventory, malimit. Okay? So, yan. Last na. Compute for consolidated profit or loss. Okay? So, how do we do that? So, nung previous video natin for consolidated basic procedures, ihain mo si parent, si subsidiary, in the consolidated profits before adjustment. So, we have 70 from the statement of profit or loss, 12,000 for the parent subsidiaries, 26,150, total of 96,150. Now, you deduct the unrealized profits, okay? Because nasa loob nitong profits before adjustment, yung kanilang intercompany profits. So, i-less mo, okay? So, less 2,000, less 800, okay? So, ang total sa consolidated na babawas mo is 28. Okay? Next, we have profits before FVA kasi we have fair value adjustments. Okay? We have 68,000 for the parent. For the subsidiary, you have 25,350. Okay? And then consolidated 93,350. Now, we less the consolidation. Depreciation. Okay? So, depreciation ha. Depreciation. We have the depreciation of 6,000. Okay? From, let's look. Yan. Total depreciation of 6,000. Okay? That's the inventory and the equipment. So, less mo siya. Okay? Actually, parang yung inventory is sa COGS. Okay? So, isinama mo na din siya. Then, for the depreciation of the equipment, that's depreciation expense. Pinagsama-sama mo na lang siya. Okay? So, total of 6,000. So, less mo siya ngayon kay profit. So, profit for it, kay parent, kay subsidiary 1, 2. Paano ba nakukuha yung hatian? 80% kay parent, 20% kay subsidiary. Okay? Then, we have the consolidated profit of 87,350. Okay? So, I hope that's clear. Parang inihain na natin na meron tayong profits. So, na-compute na natin yung profits. You don't need to compute for the whole profits itself. Kasi binigyan ka na sa FS, sa profit or loss ng bottom figure profits before adjustments. Now, you need just to adjust for the unrealized profits and adjustments in the FBA, okay, which is the depreciation expense and part of the COGS kasi yung inventory na 4,000 ang fair value adjustment niya, nabenta na daw. Okay, so kasama siya sa COGS. Okay? Then next, we have owners of the parent. Parent's profit before FBA, it's 68,000. Okay, before FBA, okay, so we have 68, then we have share in subsidiaries profit of 20,280, that's 25,350. Okay, next we have, wait, we're gonna check this. I'm checking it kasi parang, wait. Okay, so this is the share. Okay, profit before FVA 68,000, and then we have 25,350 subsidiaries profit before FVA. Okay, then you just hati it to 20-80%. Okay, and then you share again the depreciation of the FVA, that's 6,000. Then you'll get 83,480 for the owners of the parent. For the NCI, that's 3,870 ang share niya. And then for the consolidated FS, that's 87,350, which is the same with the consolidated profit of 87,350. Okay? So, I hope that's clear. Am I missing something? Oh, wala naman. I'm not missing anything. Yep, I'm not missing anything. Okay. Next, we have intercompany sale of property, plant, and equipment. So we have accounting procedures. Any gain or loss is deferred and amortized over the asset's remaining life if the asset is depreciable, and not amortized if the asset is non-depreciable. So, dito naman ang nagbentahan is PPE. Okay? So, sabi nga, kapag daw depreciable siya, amortize. Kapag hindi siya, pag non-depreciable siya, ay di hindi i-amortize. Okay, if the asset is sold to an unrelated party or outsider, the unamortized balance of the deferred gain or loss is recognized in P&L. Okay, if downstream sale, gain or loss is adjusted to the controlling interest only. If upstream, adjustment of the gain or loss is shared between the controlling interest and NCI. So the same with intercompany sale of inventory. And then we have an amortized balance of the deferred gain or loss is eliminated when consolidated FS are prepared. Okay, so the same with intercompany sale of inventory. You have to eliminate the intercompany transactions. Okay, kasi single entity sila. So this is actually the basic procedures niyan. Okay, so let's try. So we have twice co-acquired 80% interest in its Inc. on this January 1, 20X1 for 75,000. Information and acquisition date. So you have, ang pinagbago lang niya is nabigyan ka ng accumulated depreciation. So we have for the inventory 4,000, for the equipment fair value niya is 70, adjustment of 20, and then we have accumulated depreciation adjustment na 8,000. Okay, then total adjustment 16,000. Remaining useful life of the equipment is 6 years. It is assumed that 4,000 FVA was sold during the year. TWICE measures NCI at proportionate share. Okay, we have given the following information. This is actually different from kanina because this one is with equipment, 190 and 62, and then we have accumulated depreciation of 56 and 23. Then the values are different. Okay, for the statement of profit or loss, you are given gain on sale ng 4,000 and then distribution cost, yan. So we have 66 for the parent, and then for the subsidiary we have 17. On January 1, 20X1, Twice cost sold equipment with a historical cost of 10,000 and accumulated depreciation of 2,000 to Itziko for 12,000 on cash basis. The equipment's remaining useful life is 4,000. Okay? So let's analyze. Step 1, analyze. It's a downstream transaction. Why? Sino ba nagbenta? The parent. Okay? So, if record nila sa kanilang books, how will it appear? So, okay, before the adjustment ha, okay, for the parent, it will appear as debit cash kasi nagbenta siya, and then cancel out accumulated depreciation of 2,000, credit equipment of 10,000, and then recognize a gain of 4,000. Okay? Then for the subsidiaries books, we have debit equipment at 12,000 kasi pinagbenta niya 12, and then credit cash at 12,000. Now it recognizes depreciation, okay, on 12/31/20X1, depreciation which is computed as 12,000 divided by the remaining life of 4 years. You'll get 3,000, and then the credit accumulated depreciation of 3,000. That's how you appear in the books, separate books of the parent and subsidiary. Now sa consolidation, you have to reconcile para ma-eliminate yung intercompany transactions. Okay? So mhm, you have what happened. So, nung nagbenta, si Twice ko recognize a gain of 4,000. If walang benta, no gain should be recognized. Okay? So, dapat, kumbaga is, because it's a single entity, if there was no sale, walang gain, effect on console before adjustment. So, we have profit is overstated by 4,000. Pag nag-consolidated ka, okay, kasi dapat walang sale. Magre-reflect na parang walang sale. Equipment's new cost is 12,000. Historical cost is 12. So, even the equipment cost is overstated by 12,000. Okay, kasi historical cost is 10. Now, accumulated depreciation is 0 for 1/1/20X1. Pero dapat, if there was no sale, siya is 2,000. So, understated ang accumulated depreciation ng 2,000. Okay? So, it's C. Recognize a depreciation of 3,000 noong December 20X1. Pero dapat, si parent ang magre-recognize ng depreciation na 2,000, which is actually the 8,000 divided by 4. Okay? So, that's 2,000. Then, depreciation is overstated by 1,000. Therefore, profits is understated by 1,000. Kasi na-overstate yung expense mo, na-understate ngayon si profit na 1,000. Okay? Then, we have accumulated depreciation. Noong 12/31/20X1 is 3,000. Okay, that's actually the beginning na 0 plus 3,000 na depreciation for the for the subsidiary. Then for 12/31/20X1, it should be 4,000. So that's 2,000 plus 2,000 beginning plus 2,000 depreciation. Pero sa Consom, mag-understate siya ng 1,000. Okay, so you have to adjust for this. So, parang ina-analyze lang natin. Ano ba yung nangyari? Okay? First, you eliminate intercompany gain from sale. So, how do you do that? You kasi nag-credit ka ng gain. So, mag-debit ka ng gain on sale na 4,000. Then, you credit it to equipment. Okay? So, you bawas-bawas the equipment at 2,000. And sa accumulated depreciation, you add it na 2,000. Okay? Eliminate overstatement in depreciation. You debit, okay, overstated kasi yung ating accumulated depreciation per analysis natin. So, you debit accumulated depreciation 1,000 and then you credit depreciation expense na 1,000. This is actually how you analyze this. Ano? So, from there, pwede ka na mag-journal entry. Okay? So, if ayaw mo naman mag-journal entry, you can actually diretso. Parang hirap na yung English niya. Parang you can do it na diretso na lang. So that's inventory 4,000, equipment na 20,000, and 8,000 na accumulated depreciation. That's for fair value adjustment in January. Now, useful life, okay, you'll have NA for inventory, nabenta daw siya. So 4,000. Then for equipment, you have 6,000 depreciation. So we have isasama mo si accumulated depreciation na 2,000, okay? So you have total depreciation of 6,000. Now for the equipment, that's 20,000 fair value adjustment, and then for the accumulated depreciation, it's actually okay. This is actually 10,000, okay? Kasi depreciation and then negative, so 10,000, and then you have a total fair value adjustment na 10,000. Okay? So, yon. Next, equipment, we compute for consolidated equipment. So, you just add the cost. 190 plus 62, that's from the financial position, 252,000. Then, we have the overstatement. Okay? So, the overstatement was analyzed here. Yep. Nasaan yun? Yan. Actually, you can get it by, alam mong kay parent na 10,000 siya, okay? 10,000 siya, binenta mo kay subsidiary at 12,000, okay? So, meron kang overstatement na 12,000, 2,000 sa books. Okay? So, equipment before FVA, kasi dapat siya is at 10,000 lang per analysis natin kanina. Okay? So, you have equipment before FVA of 250,000. Now, we do the fair value adjustment na 20,000. Okay? So, we have consolidated equipment na 270,000. Okay? So, yun. Okay. Next, we have accumulated depreciation. We do the consolidated accumulated depreciation. So, you just get from the books 56 plus 23, parent and subsidiary. Now, you do the understatement. You add, understated kasi siya. Kasi dapat siya ay, nasan yun? Dapat siya ay 4,000, pero ang na-record lang ni ITSI is 3,000, pero dapat siya 4. Okay, so, dagdag mo ngayon si understatement. So, you have 80,000 na accumulated depreciation. And then, the fair value adjustment, okay, na 10,000, kasi siya accumulated depreciation. Okay, so, add mo siya. So, that's additional accumulated depreciation. So, you add it 80 plus 10, you have 90,000. Now, for the net, we have the consolidated equipment at 270,000 less 90, you get 180,000. Okay? For the consolidated depreciation, is the same. So, you have depreciation, kunin mo lang sa books. You have 38,000 plus 13,000, 51,000. Overstatement, so, overstated siya. Kasi dapat, ang ni-recognize mong depreciation is 2,000, okay? Pero ang ni-recognize ni subsidiary, okay, is 3,000. So, dapat i-adjust mo siya to 2,000. So, less mo ngayon yung overstatement na 1,000. So, you get depreciation before FVA na 50,000. Then, you recognize ngayon the depreciation kasi this is depreciation expense. So, you recognize the depreciation computed as 2,000. Okay, that's 8,000 If I'm not mistaken, that's 8,000 divided by 4. Okay? So, yon. Then, you'll get consolidated depreciation of 52,000. Okay? So, ma'am, parang mas masakit sa ulo ang intercompany sale of equipment. Yes, kasi you have to analyze if ano ba nangyari. Okay? So, ano lang ba i-consider mo dito? Ano nangyari kay equipment? Magkano ba dapat siya sa books if walang sale? Okay, usually sa parent mo makikita yung magkano siya dapat. Magkano ba siya napagbenta? So, yung the difference between the two, that's actually overstatement or understatement of the equipment. Then you consider for any fair value adjustments. Okay? So you were given the fair value adjustments naman, okay? Then that's your console equipment. Okay, you have to eliminate the differences between the parent and then the subsidiaries recording of the equipment. Okay, makikita mo naman siya sa journal entry. Now, for the accumulated depreciation, what should be kung walang sale? So, if walang sale, tumingin ka lang kay parent, paano niya kinocompute ang depreciation niya? Then, compare it with how would the subsidiary record it sa kanya knowing na baka hindi sinabi ni parent yung tunay na presyo niya, nag-compute siya ng sarili niya based on their useful life, magkano niya present sa accumulated depreciation. Now, reconcile mo yung two, okay, any overstatement and understatement is eliminated or reconciled. Then you have the fair value adjustment for any accumulated depreciation pa. Okay? So, you have also accumulated. Then, for the depreciation naman, how would the parent record if hindi niya napagbenta yung depreciation expense? Any overstatement, understatement between the recording of the parent should be kung ano ba dapat ang i-record niya if hindi niya pinagbili kay Etsy. Okay? And kay subsidiary, kung magkano ba yung record niya. Okay? No, hindi knowing, okay, na knowing na dapat magre-record siya ng depreciation, hindi naman sinabi ng parent ko ano yung original na price, then reconcile the two. Yun lang naman. Dito ka lang titingin. Okay, then you just have to, ano ba dapat yung recording? Kung ako yung parent, hindi ko pinagbenta, ano ba dapat? Okay, so yun. Nakakalito lang siya because ang assumption kasi ni subsidiary is kanya na yun. So, based on the information given to me by my parent, magre-record ako ng depreciation, magre-record ako ng accumulated. Di pag nagkokonso ka, ibangga mo na lang sa what should be the recording of the parent if ever hindi niya napagbenta. So, yun lang yung tinatandaan ko before nung undergraduate ako. Okay, para madali-dali ang, medyo challenging pa rin naman na mag-analyze. Pero at least, na knowing that concept in mind, medyo nadalian ako nung in doing this intercompany sale of equipment. Okay, so yun, PPE. Yeah. Okay, I hope you get the gist. Okay, so now we go to step 2. So we have, parang parehas lang din naman ng intercompany inventory sale, pero hindi ko na-delete tong isang to. Okay, you actually don't adjust it for any upstream downstream kasi wala namang upstream downstream na inventory. Okay, so yun. So we have net assets carrying amount 7491, FVA 1610. So we have net assets at fair value 90 for noong December naging 101, and then we have net change of 11,000. Okay, so ang downstream and upstream ng intercompany sale of PP is actually adjustments for gain or loss. Okay, so yan. So let's check. So if you haven't computed for goodwill, compute, it's the same 3,000. Wala naman pinagbago. So we have compute for NCIN Conso RE. So we have 101,000 from kanina. Yan, 101,000 from step 2. Times 20%, you have 20,200. For the parent, that's 116,000 from the books. Okay, then you compute for the deferred gain. So, nag-recognize siya nung simula ng gain na 4,000. Okay? Ngayon, yung 4,000 na gain na yun, ibangga mo kay 3 divided by 4. Okay? Kasi, based on our, the equipment's remaining useful life is 4 years. Okay? So, this one, ibangga mo siya sa first year niya na remaining na 3 divided by 4. So, you'll get deferred gain. Okay, deferred gain na. na 3,000. Okay? So, then you share the parents share in the net change in the subsidiaries assets. That's actually the 11,000 times parent 80%. Okay, so yun, 11,000 times 80%, you'll get 8,800. Total conso RE of 121,800. Okay, so deferred gain. So tatandaan nyo, pag intercompany sale, you need to get the deferred gain. Okay? Kasi nag-gain na niya yung per for the first year, magkano yung deferred gain? Okay? So, you get, lumipas na isang taon, 3 divided by 4, is a deferred gain. Okay? Next! So, we have compute for console profit or loss. So, ilatag mo lang yung profits before adjustments. So, we have, deduct mo ngayon si deferred gain. Okay? Kasi, that's actually intercompany. So, asin mo siya. So, adjustment, 3,000. You'll get for the parent, 63. And for the subsidiary, that's 17. Ma'am, bakit kay parent lang tinanggal? Kasi this is actually si parent yung nagbenta. Okay? So, sabi nga kanina, di ba? If it's a downstream sale of PPE, gain or loss is adjusted kay parent only. Kay controlling interest. And if it's actually upstream or si subsidiary na nagbenta, there's a share between the controlling and the NCI, adjustment for gain or loss. Okay? So, yon. Yeah, you know. Okay, so, we have yung depreciation ng FVA, so EVA, adjustments for fair value adjustments as okay, FVA. So you have 6,000. Okay, share 80%, 20%. Okay, then total conso profit of 74,000. Okay, now we now go to parents profit before FBA. Excuse me. This one, 63,000. Okay, 63,000. Okay, then we have share in subsidiaries profit 17. Okay, dito ako tumitingin ha, kanina kasi sabi ko, what am I missing, okay. Nakalimutan kong sabihin sa inyo that the 63 and then the 17, it's actually this one. 63 and the 17, okay? 63,000 and then 17,000, okay? May share si owners at si NCI. So, si 17, multiply mo 80% kay owner, 20% kay NCI, okay? Then, huwag kalimutan yung share nila for fair value adjustments. Okay? 6,000 fair value adjustments na depreciation, fair value adjustments. Then, 80% kay owner, 20% kay NCI. Total of, kay owner, 71,800. Kay NCI, 2,200. A total consolidated profit of 74,000. Okay pa ba kayo? Okay, you can pause, actually. You can pause, you can breathe, okay, and you go back to this lecture if you can actually, pwede naman kalahati lang muna ngayon and then kalahati susunod, okay? Hindi ko naman take down to. Okay, anyway. Next, intercompany dividend. So, dito naman is, paano kapag nagpamahagi ng biyaya si subsidiary. Okay, so if the investment subsidiary is at a cost or PFRS 9, this is measurement. Okay, the dividends daw received from the subsidiary is recognized in P&L. If the investment in subsidiary is measured using the equity method, so you have to consider, kapag daw cost at PFRS sa P&L ang dividends received, pero kapag daw siya ay equity method, the dividends received from the subsidiary recognized as reduction to the carrying amount of the investment. This is actually yung kung paano mo gawin yung equity and cost or PFRS 9 method. Okay, so yon. Thus, it must be eliminated when preparing the Conso FS. So, you have to eliminate it. Okay, how do we do it? If the dividends were recognized in P&L, eliminate the dividend income in the consolidated statement of P&L. So, sa P&L mo siya tatanggalin. If the dividends were recognized as reduction of the investment account, equity method. Okay, add back the dividends to the investment account. Okay, so let's do that. Example, Twiceco acquired 80% interest in ITSI Inc. For 75, information acquisition date, net identifiable assets of ITSI has carrying amount of 74 and fair value of 90. The difference is due to inventory, equipment, and then totals. So, yan. The remaining useful life is 6 years sa equipment. Assume that 4,000 FVA on inventory was sold during the year. And then twice co-measures NCI at proportionate share. Then goodwill from business combination resulted to 3,000. Sinabi na natin. Okay. Next, you're given this one, investment in subsidiaries at cost. At cost na siya. Hindi ko nailagay. This at cost. Measured at cost. Okay. Then, we have It's Inc. declared and paid dividends of 6,000. Okay, we have actually dividends income here sa profit or loss na 4,800. Okay, so may kutob ka na. Okay, parent yun. So, first, we analyze the effect of the intercompany transaction. So, the 6,000 dividends, alam naman natin na hindi buo yung ownership niya. So, 6,000, nag-declare na 6,000 dividends sa subsidiary, 80% for the owners of the parent. Okay, that's 4,800. And then, 20,000 for the NCI. At 20% for the NCI. So, we have 4,800 for the parent and then 1.2 for the NCI. Investment is subsidiaries at cost. So, ibig sabihin, if it's at cost, the dividends is recorded in the P&L. So, we must eliminate it saan? Sa Conso FS. Okay? If the dividends are not yet paid, because sinabi kasi sa problem na binayaran niya, paano kapag hindi pa? Receivable pa lang siya and payable. Then, the accounts, the receivable, the dividends receivable and dividends payable account should be eliminated as well. Okay, how do we do that? Okay, first, we do the fair value adjustments of the subsidiaries net asset. You check, because this is subsequent measurement. Check mo muna. So, you have net assets at carrying amount of 74, naging 88,000 na siya. Okay? Then, you have fair value adjustment na 16, and then for 12/31/20X1, it's 10,000. So, you have net assets at 90, for 12/31/20X1 is 98, then you have net change of 8,000. So, I have already given the FVA. So, parang hindi na tayo nag-analyze, pero it's actually the same with how you analyze it in the intercompany inventory. Okay, na ang inventory mo is na sold siya ng buo. Okay, yung may adjustment, so nawala na siya. And then for the equipment, nag-recognize ka ng depreciation, you have a total FVA of 10,000. Okay, so pasok mo lang siya. So, saan ba nakuha yung 88,000? From the financial position of the subsidiary. Okay, you have to check for the subsidiary's net asset changes subsidiary for step 2. So, you take note of that. Yan. Sa baba pala. Binigay pala. Anyway, so, ganun naman. The same. If you haven't computed for goodwill, please compute. Stated naman. So, 3,000 ang goodwill. Now, we look for compute for NCI and Conso RE at the consolidation date. So, for the subsidiary, you have 98,000. Okay, from 12/31/20X1 from step 2. Okay, 98, multiply it by the NCI's percentage 20%, so 19,600 for the NCI. In net assets, for the parents RE, we have 114,800 from the financial position. Then, you share ng 8,000 from step 2, net change na 8,000, multiply it by 80%. For the parent, you have 64. Then, you have Conso RE of 121,200. Okay? Now, dito natin makikita yung sinasabing eliminate. Okay? You eliminate the dividend income na 4,800 from the statement of profit or loss ng parent. Okay? So, tanggalin mo siya, 4,800. 4,800. Then, profits before FVA, you have 60,000, 20,000, 80,000. Then, share nila sa depreciation. Okay, 6,000 for 80% kay parent, 20% kay subsidiary, you have 74,000. Okay? Next, we have yung sharing between the owner and the NCI. So, this one is profits before FVA, 60,000 kay parent. Kay subsidiary is 20,000. The 20,000 may share si owner at si NCI. 80% kay owner, kay NCI is 20%. Then, yung depreciation of FVA, may share pa rin sila. So, you have 71,200 for the owners, and for the NCI, 2.8, you have 74,000 total. So, yun. Okay, so, You have next is intercompany bond transaction. Okay? So sa intercompany bond transaction, the investment in bonds and bonds payable are eliminated in the consolidated FS. Ano ba nangyari? Nagkautangan. Okay? Bonds payable are considered extinguished from the point of view of the group. So, paano ginagawa? The acquisition cost ng investment in bonds and the carrying amounts of the bonds payable on acquisition date is recognized as gain or loss on the Conso FS, and then any interest expense and any interest income are recognized after the intercompany transactions are eliminated. Okay, so remember these concepts kasi gagawin natin siya. Okay, example, anong pinagkaiba lang sa kanya? Wala, the same pa rin yung given, pero iba yung composition ng kanilang financial position. So, the investment in subsidiaries at cost at 75. Then, we have investment in bonds. It's C, 13,000. And then, bonds payable si parent. Sino nagpautang? It's C, the subsidiary nagpautang. Okay, may bonds payable si parent na 30,000. And then, for the statement of profit or loss, mayroong interest expense si parent at may interest income si it's C. So, we have to deal with that. So, on January 1, 20X1, it's saying purchase 50% of the outstanding bonds of Twice Co. from the open market for 12,500. So, ano siya? Debt securities. Okay? It's saying measure the bonds at amortized cost and recognize 2,000 interest income in 20X1, including amortization of the bond discount. First, we analyze the transaction. So, the carrying amount of the bonds payable, kasi ang bonds payable ni parent is 30,000. 50% daw binili ni subsidiary. So, you have 15,000. Okay? 15,000 na lang. Then, acquisition cost of the bonds, assume retirement price. So, you have 12,500. Okay? So, 12,500 kasi binili ni Itzy. Then, you have, pag minus mo lang yung dalawa, 15,000 less 12,500, you'll get gain on extinguishment of the bonds of 2,500. Okay? So, interest income, kay ITSI na 2,000 and the interest expense of twice related to the bond sale by ITSI, you have 3,000 times 50%. So, that's 1,500 are eliminated. Okay? So, yun. Mambad 50% lang yung kay twice. Kasi 50% lang naman yung binili sa kanya. So, yung kalahati, interest expense pa rin niya, give from other investors. And then, yung 1,500, relating lang siya kay ITSI, it should be eliminated kasi subsidiary niya. Okay? So, how do we do that? So, we check for the subsidiaries net assets, okay, adjustments. So, dito mo tatanggalin si interest income. Okay? So, you have net assets of carrying amount. So, you given naman siya sa financial position. Then, the FBA, as per computation, the same. 10,000 na adjustment niya. And then, the interest income, tanggalin mo na siya on consolidate. So, less 2,000, you'll get 90,000 for before, and then you'll now get 102,000 noong 12/31, a total net change of 12,000. Okay, so ini-eliminate yung interest income na 2,000. Okay, since siya yung nagpautang, so siya yung nag-invest, okay, ng debt securities. Okay, computed naman ang goodwill, so 3,000. So, you have subsidiaries net assets at fair value, less na yung interest income na wala na. So, you have 102, share ng NCI 20%, 20,400. Okay? Now, for the parents RE, you have 110,000. Then, recognize ka na interest expense na 1,500. That's 50% of 30,000. And then, you make pasok the gain on extinguishment. So, this is pro forma again. Pro forma formula. Gain on extinguishment on bonds of 2,500. And then, the share of the parents and a change na subsidiaries asset, yung 12,000. This one, from step 2, 12,000 times 80%. You have 9.6. Okay? Then, add mo lang silang lahat, you'll get 123,600. Okay? If I'm not mistaken, 556, yeah. 556, 16, 1, 2, 4, yeah. Tama. Okay, consolidated. So, this is pro forma again, pro forma. Next, we now eliminate and recognize and eliminate and recognize. Okay, so let's do this. Ilatag mo lang 60, 20, 80 from the profits before adjustment. Okay? Kay subsidiary, eliminate the interest income. Okay, less 2,000. For the parent, recognize 1,500 interest expense. Okay, next. Okay, next we have gain on extinguishment. You recognize it kay parent, 2.5. Okay, 1.5, 2.5. You now have profits before adjustment, 64,000 kay parent, kay subsidiary 18,000, kay conso 82,000. Share and depreciation, 6,000, 80, 20. You'll get consolidated profit of 76,000. Okay? Now, we distribute the 76,000, 64 daw kay parent, kay parents profit before FVA 64,000, the 18,000 share owners of the parent, and then the NCI. Then pasok man depreciation of FVA 80%, 20% you'll get kay owner 73,600, and kay NCI you'll get 2,400, total of 76,000. Okay, so remember this. You eliminate interest income na 2,000, you recognize interest expense, and then the gain on extinguishment. Okay. Kasi sabi ng standard, any gains or losses from acquisition or the retirement price less the carrying amount of the bonds payable is recognized in Conso FSE in the gain or loss. Okay. Gain, yeah. Or in the PNL pala. Sorry, in the PNL. Okay. So, yan. That is the adjustments. Okay. Okay. Let's go. Okay. Am I missing something? So, that ends my discussion. Okay, I know it's medyo challenging, okay, kasi talagang kung makikita mo sa mga groups, sa mga accounting groups, sa mga review groups, makikita mo talagang maraming pro forma formula ang consolidated FS, especially when it concerns intercompany transactions. So, ito na yon. Okay, so maaaring merong sariling version yung makikita mo, compared sa present nating version ng technique ngayon. Okay, so it's up to you. Saan ka mas komportableng gawin? Yun naman ang aking laging sinasabi. Okay, kung saan ka mas comfortable gawin, you do it. Kung may na-discover ka mas madali, ay di, go lang push. Okay, so this is another technique that we are actually doing, that I have actually used in the board exam when I had my board exam. So, kaya ito yung aking present. Okay, so, yan lang naman. So, see you sa guided exercises. Ingat guys, and see you again.